Okay, so hello everyone. Let's just wait a bit and then we will start. Okay, just one more minute. Today we're gonna have very interesting theme. I think that most of you will be interested. And in the end, we will have a Q&A so everyone can ask their questions. So, okay. Hello everyone, my name is Marina Nestrenko. I'm head of customer support in Trustee Plus with more than 3 years of experience in building our support team. And today we're gonna talk about the corporate crypto playbook, or I can say that also we can name it like crypto for business. So today I want to talk about crypto from a very practical angle, how businesses can use it as a payment and treasury tool, not as a speculative investment, of course. When people hear crypto, many think about Bitcoin price charts, but in business the real value is different. Moving money faster, often with fewer intermediaries, and with the ability to build strong controls and visibility around transactions. So we'll focus a lot on stable coins because they're most business-friendly format because stable value, fast transfers. I also highlight the operational part like roles, approvals, compliance, and security because that's what makes the difference between trying crypto and using crypto safely. If you're new to this topic, perfect. I'll keep everything simple and practical. So let's go. Our agenda. So here's what we'll cover. First, the business case. What problems crypto can solve better than traditional banking? Then we'll discuss stablecoins and why they are usually the entry point for companies. After that, we'll go into the main use cases. Payments, so receiving money from customers or partners, payrolls, payouts, paying contractors and remote teams, exchange and treasury, converting between crypto and fiat and managing balances. And finally, we'll talk about how to do this properly. So, treasury controls and approvals, roles and compliance like KYB and AML, and of course, security best practices, because many risks are human, not technical. And in the end, we'll do a Q&A, and I can also suggest a safe stop like for your business, for example. So let's go to the third slide. So let's start with the business reality. Traditional cross-border transfers often take days, not because banks are slow, but because the system includes multiple intermediaries, working hours, weekends, and compliance checks that can pause the payment. With stablecoins, you can often transfer value 24/7, and settlement can be minutes instead of days. For a business, that changed a lot because faster supplier payments, faster payrolls for remote teams, and faster movement of funds between entities. Another practical advantage is transparency because many blockchain transactions are trackable, meaning you can often verify that money has been sent and see when it arrives instead of guessing where it is in the banking pipeline. And for example, sometimes you even need to ask for error and code to understand where the money goes. So, important note, faster doesn't automatically mean better. You still need rules and controls. But speed plus visibility is a strong reason why businesses look at this. So, think of banking like a chain of warehouses. Think of stablecoin transfer like a direct tracked courier, fewer stops and faster confirmations. So, to make crypto usable for business, we need to reduce volatility risk. That's why stablecoins matter. A stablecoin is a digital token designed to keep a stable price, usually pegged to a currency like USD or EUR. We have many of them right now on the market, but USD is one of the most popular one. So, instead of receiving Bitcoin and worrying about price swings, a company can receive something closer to digital dollars. So, why businesses like stablecoins? Of course, because of the stable value. It's easier for budgeting, pricing, and payrolls. Fast settlements, because same crypto rails but stable price. And of course, global accessibility, useful for international counterparties. But stablecoins are not all identical, they differ by, for example, issuer model and reserves. Of course, supported networks, because, like, for example, some can support Ethereum network, some of them cannot. And availability on platform and compliance requirements. So for most businesses, the goal is simple. Stable coins are a way to get speed and programmability without big market risk. So if you remember one sentence, stable coins are basically digital cash that moves like crypto. So now, how can business accept payments in crypto or stable coins? There are two main approaches. Option number one, direct transfer. So it's like a simple thing just to test the flow. So you provide the wallet address and the customer sends funds. This is the simplest method, but it requires internal processes. How do you match a payment to an invoice? For example, how do you confirm it arrived? And what happens if the customer uses the wrong network? Because usually you have to resolve such issues very fast, and you should think about it. And option number two, it's about payment gateway or invoicing flow. So this is closer to traditional payments. You generate an invoice, the system tracks the transaction, and you can automate confirmations. It's better for scale and accounting. Operationally, the most common issues in crypto payments are not blockchain problems, because they are, for example, when customers send the right token on the wrong network. I love such cases, it happens a lot. Customers send a different token than expected. That's not happens a lot, I can tell. Customers send less due to fees. That's also not a lot happening. And transaction need confirmations. So for business payments, success is clear instructions plus a support checklist plus reconciliation rules. So a good practical rule, always show the user asset plus network plus amount, not just send USDT, right? Like you really should mention, like, okay, you should send USDT, for example, in TRC20 network, not just USDT, because it's the most common thing that people just forget about. So payrolls and payouts are one of the biggest real-world use cases for stablecoins. For companies with remote teams, contractors, influencer, or partner across countries, stablecoins payouts can be faster than international bank transfer, of course, simpler than dealing with many local banking details, and more predictable in timing. But the workflow must be strict because crypto transfers are generally irreversible. So best practices is first, always do a small test transfer for a new recipient. It's very important, really. So the second one, keep an internal approved address book. Third, use a clear policy for address changes and verify via a second channel. And the last one, define who can initiate payouts and who must approve them. So this turns payout into a routine, not a risky manual process. In other words, businesses shouldn't wing it. They should treat crypto payouts like finance operations. And the biggest risk here is a human error. The solution is process, not more technology. After receiving stablecoins, companies often need exchange operations, so like converting between stablecoins or the crypto or fiat. A typical business flow looks like receiving stablecoins, decide keep for operations or convert to fiat, use exchange functionality to convert, and then send out for payroll, suppliers, or withdraw to a bank. Here's what matters for businesses' exchange decisions. Sorry, what happened? Okay, everything is okay. So here's what matters for business exchange decisions. First, cost, of course, spread and fees, liquidity. Can you exchange at needed volume without big slippage? Timing, immediate conversion versus scheduled conversion, and reporting. Finance needs clean records for accounting. For many businesses, exchange is not about trading, it's about treasury efficiency, keeping funds in the most useful format for upcoming obligations. So, simple rule, don't treat exchange like a casino, treat it like a currency conversion desk. Let's go to the treasury controls. So, this slide is about how companies stay safe when holding and moving funds. In businesses finance, the most important concept is control, reduce risk. So, we apply the same principle in crypto. So, separation of duties means that one person initiates, another approves. Limits, thresholds for transactions and daily volume. Segmentation, separate wallets and balances for different purposes. A simple structure that works well. For example, operations wallet, small and used daily for payouts. Reserve wallet, larger and protected with stronger approvals. I even would recommend to use a cold wallet for such things. And optional, fees wallet or hot wallet for frequent small transactions, like a daily one. So this approach reduces the blast radius even if an operational account is compromised. Reserves are protected. That's how you make crypto usable at scale. So let's go to the business accounts. Right now, this is one of the most important sites. Multi-sig or dual approval means no single person can move money alone. So you need two or more approvals for outgoing transactions. Why this is critical? It prevents one compromised account. It doesn't mean that you will be in total loss. It blocks many phishing-driven incidents. It reduces mistakes because a second person reviews the address, network, and amount. And of course, it creates accountability in finance operations. A common model is 2 of 3, like CFO approves, CEO approves, and OPS. Lead can be third signer for redundancy. Also, a small language note. Just let me explain. Yeah, here on the slide you can see the phishing, but it should be written like a PH, phishing. Sorry for that. So, dual approval forces a pause, and that pause is often what saves money. Let's go further. So, roles and compliance. Now, a business needs clear roles, of course. So, for example, admin, he will be managing permissions and settings. Finance operator initiates payments and prepares reports. Approver confirms and signs outgoing transactions. And viewer or auditor read only access for oversight. So the second part is compliance and reporting. Of course, it's the best when you can have transaction logs, you can export for accounting, and you can get audit trails for approvals and changes. This matters because businesses are not only paying, they are also accountable to internal finance teams, auditors, and regulators depending on geography. So the goal is make crypto operations look like proper finance operations, controlled, logged, and reportable. That is what turns crypto from a tool into a business system. So the idea, business accounts is coming soon. It's just on the way. But by the way, I can tell you a bit about what we're planning. So the idea is to offer business-ready accounts that support the workflows we just discussed. Receiving funds, holding and managing balances, exchanging, paying out, reporting, roles, and approvals, of course. Even before a full business account, teams can already test the logic with small amount to understand how deposits work, how transactions look, how confirmation happens, and what users see and what support needs to handle. For a company, the best approach is start with low-risk tests, build internal guidelines, and then scale volumes when the process is stable. So just think of it like a pilot project. Test, document, then scale. So for example, for now, you can use just a regular account in Trustee Plus just to test how, for example, you can send money to your friends. We even have a like a button to send money at once to many of your friends, for example, to 10 of them. You just have to press the button transfer, and then you can upload the CSV file with the phone numbers of your friends, with the amount and the currency, and at once you will send money to everyone. So it looks like just multi-transaction. So just I'll sip water. Okay, so a very interesting part, I think, KYB and AML. I know that many people don't love the way it happens, but we have to face it. So, to operate responsibly, business crypto activity needs compliance, of course. So, KYB means know your business. I think that many of you already know what is KYC. It's like know your client, but here's the KYB, of course. So, it means that verifying the company owners and structure. And of course, AML means anti-money laundering, so it rules to prevent illegal funds and protect the ecosystem. In plain language, compliance makes crypto trustworthy for business use. It helps reduce fraud risks, protect the platform and legitimate users, make large-scale operations possible, and from a business perspective, the best preparation is legal company documents, proof of beneficial ownership, proof of business activity, and clear explanation of fund source and typical transaction flows. So if you plan to operate at scale, KYB and AML is not optional. It's the price of stability and long-term access, of course. So I love everything about security. So this is where we focus on practical security. Most crypto incidents are not about breaking cryptography. They are about phishing, of course, fake support messages. So that's why, for example, we don't have a support team that will help you in WhatsApp, for example, because everything is an app just to protect you. Leaked passwords and rushed decisions. The last one, I think, the worst one. So the best defenses are simple and effective. Use 2FA everywhere. Use a password manager. Prefer passkeys when possible. In Trustee Plus, you can use passkey, so I would recommend you to use it. Verify addresses and networks carefully and confirm changes like new payout address via second channel. So if someone rush you to change everything, something very fast, you have to check it twice. And business grade practices, whitelisted addresses for payouts, dual approval for transactions, and limits admin access to a small number of people. And of course, separate devices or accounts for high value operations. So, security is not one setting, it's a daily routine. The goal is to make doing the wrong things difficult. So, if something is urgent, that's exactly when you slow down and verify. So, let's go to the Q&A. Let's check our questions. So I can see one of the questions. So how do you recommend presenting a crypto treasury strategy to a board of directors or institutional investors who may be skeptical? What financial metrics or benchmarks make the strongest case? So I can tell that the mistake most finance teams make is leading with the crypto narrative. Boards don't want to hear about blockchain; they just want to hear about risk-adjusted returns, cost reduction, and operational resilience. So frame it this way. For example, you can present crypto treasury as a working capital optimizational tool, not a speculative bet. The numbers that resonate most are cross-border transaction cost savings, of course, because it can be like up to 5% if we compare it with Swift, for example, and settlement speed, because usually crypto transfers goes in minutes, comparing to a usual banking system when it takes like days, and counterparty diversification, of course. So if you're holding stable coins rather than volatile assets, you can demonstrate that this is essentially a digitized USD position with better mobility, of course. So the second thing boards care about is a custody risk. This is where pointing to an institutional grade provider like Trustee Global significantly there is the conversation. So you're not asking the board to trust crypto, you're asking them to trust a custodian with multi-sig controls and asset segregation. So that's a very different thing, of course. Okay, so next questions, just more water. Okay, so beyond generating audit reports, does Trusty Global integrate directly with tools like QuickBooks, Xero, or SEP, or does reconciliation still require manual exports and mapping? This is an area the whole industry is actively building toward, and the honest answer today is that is it's partially automated depending on your stack. So Trusty Global provides structured transaction exports with the data fields you bookkeeper need. So cost basis at time of receipt, transaction ID, counterparty address, asset type, and fiat equivalent at the time of the transaction. So for QuickBooks and Xero users, these exports can be mapped with relatively minimal effort, and there are third-party reconciliation tools like Crypto, Coinly for Business, or like that sit between your custodian and your ERP to automate ledger entries. Okay, so for SAP or Oracle environments, typically larger enterprises, the integration is more custom and usually requires a middleware layer. If your company is at the scale, it's worth scooping the integration before you go live with crypto operations, not after. And we can connect you with Trusty Global's like business team. We're just developing, but by the way, to understand exactly what data formats are available and how they map to your accounting structure. Just 1 second. Okay, so next one, just more water. Okay, so for companies paying remote teams in stablecoins, what legal agreements need to be in place? Are there jurisdictions where receiving salary in USDT creates unexpected tax or labor law complications for the employee? I'm not sure that I can talk about USDT, but about USDC because USDC is what people use in EU. So yes, and this is generally one of the more legally complex pieces of corporate crypto operations. The short version, for example, crypto payroll is legally sound in many jurisdictions, but the paperwork has to be right. So the foundation is a written addendum to the employment or contractor agreement that specifies the payment currency, for example, USDC, and the reference exchange rate used for converting agreed fiat compensation and the payment wallet address. So this protects both of the company and the employee, especially if a tax authority later questions the agreement. So the risk areas are not where you'd expect. Countries like Portugal or El Salvador have relatively straightforward crypto income treatment. So the complications tend to rise in markets like Germany, France, and Australia, where receiving compensation in digital asset can trigger immediate income tax recognition at the moment of receipt, even if the employee never converts to fiat. In some countries, labor law technically requires salary to be paid in local legal tender, meaning crypto payments need to be structured as contractor payments rather than employment compensation. So, a Trusty Global stablecoin payment infrastructure handles the delivery side cleanly, but we always recommend pairing it with local legal counsel in each jurisdiction, where you have team member in one-time setup cost that prevents significant downstream compliance issues, of course. So, I think that's it. Let me check. Okay, just one moment. Just let me check. Maybe I lost something. Okay, so yeah, I see some question. Just one moment. Yeah, so what happens operationally when a supplier or freelancer refuse crypto payment mid-contract? What hybrid payment workflows work best when only part of your supply chain is a crypto ready? Okay, so vendor refusal is common, especially in the early stage of rolling out crypto payments infrastructure, and the answer is to build a hybrid model from day one, rather than treating it as a fallback, of course. And practically, this means your treasury holds stable coins, like primarily USDT or USDC, and you maintain an automated conversion layer that can push fiat to vendors who require it. So, Trusty Global's infrastructure supports this kind of flexible outbound payment setup. You can originate from your corporate crypto wallet and settle in fiat where needed without maintaining two entirely separate payment systems. So for contracts, we recommend adding a payment method clause that specifies stablecoins as a default with a fiat equivalent fallback at the spot rate on settlement date. This removes ambiguity and protects both parties. So over time, as more of your supply chain becomes comfortable with stablecoins, you shift the default without renegotiating the entire agreement. So I think it's gonna be very useful. Okay, so I think that we can finish. Okay, so okay, then I think that we can finish maybe because I see no questions anymore. So, thank you for your time and attention. If, for example, if you'd like to continue the discussion, you can scan the QR code and ask me. So, for example, I can help you with the stable coins, how to manage them, and also as soon as we will have a business account that can be useful for every business, we will make an announcement on our website, and I think that's on our social media also. So have a nice evening, have a nice day, everyone. Thanks for watching, and see you soon. Goodbye.